Good day all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for this Monday, the 4th of May, 2020. We're about 4:40 in the afternoon. Well, as you can see, a pretty mixed day. You can see the green and the reds on all the boards. They're a little bit of everywhere. The standout performer today, the QQQ, the NASDAQ was the leader as the stock indices were breaking. And this morning, they were all down sharply in the futures. It's the QQQ, the NASDAQ, that came alive and supported the market on that and carried the day back where in a number of them, if you take a look, they closed higher. The QQQ, SPY, DIA, IWM, not the futures that way. There was a mixed bag in there. We had the pound down a little bit today, the yen up just a fraction on the day, and the euro, well, the euro's waiting tomorrow for a big event. The German courts are going to rule on whether or not within Germany what the European Central Bank is attempting to do as their rescue measures are legal under German law. So the European Union, no matter what they want to do, the ECB can set a policy. The problem is if it doesn't meet German law, it's not going to be enforced there, so what's the point of it with their largest economy that makes it up? Very important day. We'll see how that does because it bodes ill or well for the rest of the European Union, depending on what's being said. Let's go to the charts if we could right now and see what we've got here. Let's see if I can get it. There we go. Sometimes these magic wands. We had a 50% rally in the technology sector. So you can see how XLK did, and it's holding on to it. There is no question this has been a powerhouse part of the market. The chips, people believe that they're going to be strong. They're staying strong. The technology sector, they believe that this is in good shape, and you're seeing that at this point. When we look at the swing line, which is a line that connects the previous day's either low or high to the current action. There are 5 rules that make it up. I teach them in the charting course that I have, which works be it on futures charts, stock charts, option, doesn't matter to me. A chart's a chart, a chart. When I look at it, I see higher lows, higher highs. What would break that pattern is taking out 86.59. I then put moving averages on a chart, and I consider them the filter of what the swing line is doing. So if the swing line's up, I want to see that prices are over that 18-day average. Gives me another mode that's bullish. The second thing, where's resistance or support according to those moving averages? So we're in the resistance of the 100-day average, and we have been finding support on breaks against the 18-day on the break. Do you see how that's been working? But the bias is up, the swing line's up. What about another resistance point? I'm always looking at Bollinger Bands, an algorithm designed to keep the market contained within the bands 95% of the time. So the resistance level's the 100-week average, 100-day average, I should say, and the upper Bollinger Band at 92.11. The last rally high we made was 92.14. That'll be an interesting battleground if it gets there. Is there anything on the chart that can turn it bearish? The answer is no. What could negate the uptrend? Taking out 86.58 would break the pattern of higher lows, higher highs. What about momentum? You got divergence here. Momentum's trying to turn down. See how these numbers are now getting back under the 80 level. So if momentum's turning down, is it saying that price is led by momentum, or momentum is following price? I think that momentum leads price. So even though you were up today, I'm concerned about that. I'd like them to go together, not fight each other. When we look at the U.S. semiconductor, the SMH, not the same action at all. You broke down now. You took out this 128.32. So the first challenge of the Bollinger Band, up here, we'll come right to that so we can see it. Here's the market making a run for it. The trend is up. Higher lows, higher highs. First resistance, let me just show this right here. The 100-day average. You had it back here, here, and here. If it pops through there, maybe you can get to the upper Bollinger Band. Not quite yet, still in play. Momentum still strong in the market. The question is, does it embed? Now, embedding means both numbers have to be over 80. It's not. When it's not embedded, especially when it's not embedded, that first challenge of the upper Bollinger Band becomes a real ugly zone, because I think a lot of money looks to get through that doorway up there. You get there, and I'm sure everybody's turning bullish, and both numbers get over 80. It takes 3 days in a row over 80 to embed. 1 day's just overbought. Market stalls out and immediately loses the capability of doing that. That's ugly. So now you get your pullback. So momentum had defined what price was going to do. That's what I think. In the XLI, again, you're in an uptrend. When you're in an uptrend, the bias is up. The trend is up here. The target could be the upper Bollinger Band. Market makes a run, hits it right through there, and now you're getting your pullback right back to the 18-day average. If this market takes out 60.58 and today's low is 60.60, you break the uptrend. Momentum leading price to the downside right now. When we come to the energy sector, still in an uptrend. Higher lows, higher highs. Each hit of that Bollinger Band throws the market back for the guys if they want to be a buyer. But you're overbought. I don't see this market in sync with itself, but certainly in an uptrend at this point. QQQ, let's take a look. Here's what bothers me. You lost the embedded reading on Friday. When you lose it, I feel the market's going to make a run to the closest moving average under it, or a Bollinger Band. It depends where it all happens. You got in this case, you lost it. I'm looking for the closest of the 100 or the 18-day average. They happen to both be the same number, but they won't be when the market reopens today, Monday. Market makes its run, hits exactly the 18-day average, found its support against it. But you've lost. You're overbought now. So as bullish as everybody wants to be, my work is saying, you know, it's been a nice run. I think it's a little rich up here. You step back. Momentum isn't quite agreeing with this. In the emerging market ETF, last week was the key. This is how we were last Monday, and we had talked about this. You're making your run at what number? The upper Bollinger Band in an uptrend that's overbought. You get your gravy. Overstay your hand, it could be expensive. I'm not saying it has to stop going up. What I am saying is, regardless, if you got 1,000 shares, maybe you're taking off a quarter, some portion. You manage your money, I don't, but you want to be careful. That's not an add-on zone. That's a take some money off the table zone. When we come to the emerging, we just did this, the emerging market. So let's go now to the gold. Gold is fighting a battle at the 18-day average. The bears are in control right now, not the bulls. And it's a tug of war right here. You've got lower highs, lower lows. You're refusing so far to make a run to the lower Bollinger Band. And momentum, which had been pointing down, is trying to turn. The bears are probably, this is their defense line right here, the 18-day average, but you get over 161.85, they lose this battle. Then you've got a lower low and a higher high. You're into nothing. At the same time, the Bollinger Bands are slowly, very slowly, starting to get closer to price. So you're compressing price action. In the gold miners, this was a good day for the miners. However, you're still overbought. You don't have a pattern that's worthy of trading. You got a higher high, lower low. And I realize people are going to say, Ira, those miners, they're going higher. Well, I'd agree with you back here. But here, I'm changing my tune. You also lost the embedded reading. So how close did we get to that 18-day average when you did that? Here's the market. You lose the embedded reading. You're at that day, 32.26. I want to see if price and the 18-day average make a run at each other. I would say that's pretty good to get within 8 cents and the bounce up today. Still, 8 cents is still 8 cents. I wouldn't be surprised if you get down to that number. The Treasuries in a bear trend. You've got lower highs, lower lows, momentum still aggressively pointing to the downside, bias down. Is the market going to make a run to the lower Bollinger Band? That's what you don't want to see if you're a bear is 170.26 taken out, and they'll probably try to defend their position near that 168 level. Wouldn't surprise me. Then we get to FXE, and you've got to be very careful here in this FXE. Tomorrow we get the German court rulings. We want to see if the German courts uphold what the European Central Bank is doing as their measures to rescue us from the COVID-19 for the European Union or not. If not, they got to go back to a drawing table. That would not be bullish, this market. So let's see what happens. You want to see unity, not something become disjointed. This is too rough of a situation. America's thrown the kitchen table at it. Europe continues to fight in ways to undermine getting something done because the have-it states like Germany, well, they don't want to support the Italys and countries like that that aren't the have-it countries. So you put it all together, you get all this other part, and what I try to do is help you. In the afternoons, you know what I do. I come out and I put out a video. It's a video for SPDR and ETFs with trade recommendations. I go through the markets, and what it really does is it ties in for a lot of people with my morning futures video. Here's why. SPDRs and ETFs, well, be it a currency, be it a stock index, the gold market, the silver, they're looking on these that we're looking at, these SPDRs and ETFs, at the technical analysis and the pricing that the futures are doing. Futures trade 23 hours a day, starting Sunday at 5 in the afternoon, quitting at 4 on Friday. You don't get that in these markets. You're opening up at 9:30 in the morning, New York time. You're closing the market at roughly 4 o'clock New York time. You're getting those hours. So these markets are pulled one way or the other by what the underlying is done. It's why you see fair market value come out on CNBC, and they're talking where the indices are compared to the futures. You get this all the time. So at first I was going to do this video in the morning, and I decided, I'm talking my subscriber video, I got some nice letters, and they were saying, you know, do it for us in the afternoon. We can look at it in the evening. A lot of us subscribe to your morning, and we can see what you're talking about there, and we understand the play. That's basically what we do, and we cover all this for you. Cost very inexpensive, $8.95 for you to give it a try. So if you do, you get an awful lot for it, by the way. You get our handheld applications. That's the first thing. You get daily numbers on this. So the daily numbers tell you where to put other studies, and you'll see what I'm talking about as you get into these videos. How do you find out more about it? Just simply go to our website, under Research, SPDR ETF video in the afternoon. It explains everything, and you sign up right there. I'm Ira Epstein. You have a great day. I will see you all tomorrow.